Clay Patton on the Rural Radio Network. Let's take a recap of the weekly commodity trade now with Darrell Holaday, Country Futures in Frankfort, Kansas. Darrell, I know there's a lot of things we can talk over on the week, but really a lot of it culminates Friday when we get out the USDA stocks numbers. We also get out the estimated plantings for the 23 growing season. So let's start there. What's your takeaway from these USDA reports?
Well, it was very interesting. I think obviously the stocks numbers grab your attention because they were 40 million bushels in both corn and beans below expectations. And I think that's worth noting. And we saw the strength in the front end of the market as a result, the May contracts. But I think I would caution that as we move forward, the market soon realizes that they've already traded that. We already went through those stocks. It is supportive, but I'm not sure it's blow-off supportive. The market really as a whole, the acreage numbers had some impact, but, we ended up with the corn at 92 million versus, the expectation of around 91 million. Beans were at 87.5, which is basically unchanged with a year ago and was down 700,000 below expectations. That's the big, broad thing that everybody's got the headlines on, but that really, to me, the bigger picture on the acreage came in actually a couple notes, and that would be, first of all, the winter wheat number. Another 500,000 acres added to winter wheat versus the January number. So we're up 4.5 million off of a year ago. So that's really what happened. I think all of us that live in the plains, we thought this was the case, and the numbers are coming to bear and indicating that was true, and that we just saw a tremendous amount of wheat put in the ground just because of the drought and the concern about forage and we need and feed. Now, again, weather has cooperated in some areas of that region, other areas it has not. But it's worth noting, Texas, for example, if you look at their intentions and what they've actually planted winter wheat, down 21% on cotton, corn down 5%, unchanged on sorghum, but up 29% on wheat acres, and that's a lot in Texas. So that's the shift we saw. We saw that in Oklahoma. We saw some of that in Kansas. And then the other factor in winter wheat is the big increase in softwood winter wheat across the Midwest. There's a factor that probably people didn't gauge into this, is that RMA last fall or last summer decided they were going to move the line in which you could cure double crop beans from what I'd call the line that ran across northern Kansas right through southern parts of Illinois, clear up to the Wisconsin border. That created a great opportunity for central Illinois producers to say, I'm going to put some winter wheat in the ground, softwood winter wheat, cut it, and I can put beans right behind it. I can insure them. And that's certainly showing up with a big 35% increase in softwood winter wheat acres in Illinois and increases in Indiana and Ohio. So lots of factors, and that's why you're going to continue to see pressure on that softwood winter wheat contract. Of course, hard red winter wheat supported by the continual concerns about the dryness in the southwest Kansas and western Kansas as a whole, northwest Texas, northwest Oklahoma. That's really that, and we've come down to where April is just absolutely critical as we move forward. Now, we did also see during the week some good to continue to see strong buying by China, but once again, a lot of that build in. As you said, we are really just traded the numbers. That was where the big run-up came on. We did see strength all week in the old crop soybeans, and we just kind of added to it on Friday. I still look for a very volatile trade there. I mean, we know the old crop supplies are going to be somewhat tight, but you're going to run them up high enough in corn and beans to stop any exports, and our export potential is not very good. The crushers will run the market. The soybean crushers, domestic crushers, will run the soybean market. I think you get the May corn up there in that 660, 670 area, you're going to once again just cut off exports like we did earlier this year before we broke, and we're going to see that window open up when Brazilian safrinha crop starts being offered for that June-July period, and that's kind of how the dynamics of the market are going to work. Also, of course, that dry area that we've talked about, very critical. April, very critical for the winter wheat. It's also very critical to increase forage supplies, and that's going to become a cattle issue down the road if we don't see something change here rather quickly, because we really went downhill this week in western Oklahoma, northern Texas, southwest Kansas. The high winds, warmer temperatures, really, of course, dry conditions, and not a lot of prospects for moisture at this point in time. That can always change, but it doesn't look they're not very optimistic right now as a whole when you look at the overall models. May corn on the week up 17 cents at 6.60. New crop December corn 5.66 up 6 cents. May soybeans 77 higher at 15.05, and new crop November 47 higher at 13.20. May Kansas City wheat up 30 cents at 8.78. New crop July 28 higher, 8.62 on the close. Crude oil was also a factor. It moved to help the corn market, supported the front end of the corn market. These ethanol margins got a little bit better, and we certainly kind of helped support the soybean oil after it had a tough week early in the week. Saw some strength late. Crude oil closing up 6.41 on the week at 75.67. Over in the cattle, a lot of excitement. That excitement really broke out on Thursday. Of course, futures were higher most of the week and kind of pulled the cash market higher, but we definitely saw $4 to $5 higher cash in the South and the North. We still have that about a $4 spread between the two, but 67 to 68.5 caught most of the cattle in the South, which was 4 to 5 higher. In the North, the same way, 71 to 73, 72 area in the northern markets. And so packers just continue to scramble for supplies as we see just a little more competitive environment, maybe fewer captive supplies, tighter numbers, going into seasonal strength in the beef. The market, they certainly want to try to keep plants running. They're going to have to, in the end, we're going to have to cut slaughter levels because the cattle aren't going to be there. We're going to release numbers, and we're going to have to go. I remind people, if you look at the per capita supplies of beef, which might end up being lower than this, but even if you looked at where we thought we were going to be, we're going to be 3 pounds down on for the year for if you add on a per capita basis in the United States. So what's going to determine who cuts 3 pounds or 6 pounds out of their diet in 2023? And the answer will be price. The market will do it. The market will go up to where somebody says, I'm not going to buy that. I'm going to buy something else, or can't buy that. And that's what's going to happen, and that's the function of the market. And we're certainly seeing that take place now. Hog and pig report came out on Thursday. The numbers they revised December like we thought they would. They have to go up 1.3 million. If you look at the summer supplies, it's a little bit supportive, and the numbers were neutral. Looks like as we get into middle of May, late May into June, we're going to see numbers drop down to about even with a year ago. But the front end of this market is still really weak. So again, a market that really anticipated tighter numbers and got too high, and now we ended up with numbers that are above a year ago, and that has pressured the market as a whole. And that sometimes when you get in that situation, it ends up just a market that just is somewhat of a free fall with that index now back below the $76 level. On the week, April cattle 168.35 up 602. June cattle 552 higher at 162.12. April feeders $200.82 up 602. August feeders 785 higher at 221.97. April hogs 75.25 down 192, but the June hogs did squeak out a small gain, up 20 cents at 91.62.
And that is Darrell Holaday, Country Futures, Frankfort, Kansas. Learn morning time at countryfutures.com. That's countryfutures.com. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.